Hello everyone, I'm Kunal Sodhani from Shinhan Bank India Global Trading Center, and we are here with another episode of understanding the currency pairs, analyzing what has happened in terms of the global sentiments and the domestic factors. So first, the recent number was the CPI number for India, which came in at 4.83%. Well, it came in at 11-month low, and mainly because of the three factors. One, obviously, the food and lighting that came in lower. Then it was again the housing part which came in lower, and also with respect to the clothing and footwear. So these three items were, a trigger point where we cooled off in terms of our CPI number and also in the comfortable band. But the point is to also understand the food inflation, which came in at 7.9%. And if we talk about the vegetable inflation, which rose to almost around 27%. So food inflation continues to remain sticky. So now if we take that into account, rate cut trajectory may not be as early as we are thinking. I think it may take time. Monsoons can be one of the things which needs to be really watched out from the vegetable point of perspective. Also, if we talk about the FPI numbers for this month of May, we have seen outflows of around 18,000 crores in equities and around 1,000 crores of outflows in debt. Also, if we talk about the FX reserves did bounce back by around $3.66 billion, now at standing at around $641.5 billion, and mainly due to the increase in the FCAs, basically the revaluation contributing to the higher reserves. So we are still at around the all-time highs of $648 billion, so near those levels, comfortably with around an import cover of around 11 months, which is decent on that side. Globally, if we talk about the Fed speakers are still continuing to remain hawkish, which means they are still seeing that inflation numbers are to be considered, and cutting off rates too early may be risky. So which is again pushing the rate cut trajectory towards September, November of this year. But on the contrary, if we talk about the ECB as well as the Bank of England, where Bank of England somewhere the rates trajectory has been projecting a cut possibly in June, while for the ECB it's pointing out to be in August. Though again, these are market dynamic numbers which keep on varying on a daily basis and how the data points comes in for the respective countries. So we have seen starting with Fed how aggressive they were and how cooling off in terms of the rate trajectory they have turned into. Also, if we talk about the overall dollar rupee pair, it has been, in a very sticky range of 83.42 to 83.55. And election related feeds, actually are keeping the markets volatile apart from the dollar rupee pair, but flows will remain quite crucial. And broadly, this level or this range may continue, but only a break below 83.30 may provide some kind of reversal, while an upside break of 83.60 may have a test of around 83.72, which is the NDF highs. So that's all from my side, friends. Thank you and have a wonderful week ahead. Thank you.